Test. 1, 2.
There it is. Maybe I need this for my kids. We're going to start in about 60 seconds. All right. The committee will come to order. Welcome and thank you for joining today's hearing entitled Financing Farm Operations, the Importance of Credit and Risk Management. After brief opening remarks, members will receive testimony from our witnesses today, and then the hearing will be open to questions. In consultation with the ranking member and pursuant to Rule 11E, I want to make members of the subcommittee aware that other members of the full committee may join us today. And today we will hear from lenders representing diverse regions across the country, along with a producer, all of whom bring firsthand insight into the challenges farmers face when seeking the capital necessary for success. The reality is that farming is getting tougher every year. Input costs are up and market prices are down. If we don't support today's farmers, there won't be a next generation ready to step in. We must ensure the resources available to those who provide capital to our producers can meet the moment. This is why Farm Bill programs matter. They form the foundation of affordable, reliable credit for our producers. Lending tools and risk management programs like crop insurance and commodity programs work hand in hand to help farmers withstand downturns and sustain their operations. The loan programs to the safety net, it's critical that producers and their lenders have as many tools in the toolbox as possible to ensure dependable access to capital. This is essential to maintain the safest, most abundant food supply in the world. Over the past 6 years, we've seen nearly $130 billion in ad hoc assistance flow to producers, many of that in my district. While that support was necessary in times of crisis, it is no substitute for a durable, predictable safety net. We owe it to farmers and lenders alike to build a system that doesn't rely on ad hoc assistance every time a disaster strikes. And I might add, the ad hoc assistance in many cases takes well over a year to get to the producers. That's exactly what the One Big Beautiful Bill does. We've strengthened the farm safety net, increased reference prices, expanded access to crop insurance, and the opportunity to add additional base acres are just a few of the real improvements that will bring more certainty to producers and reduce risk for lenders. Additionally, the bill significantly raises the federal estate tax exemptions and makes it permanent in the tax code, allowing farmers more clarity to plan for their future. We know our work cannot stop there. Today, our loan programs don't reflect the realities of the modern family farm. Loan limits are outdated, and the lending process is often slow and burdensome. We must ensure that the credit programs at the Farm Service Agency are improved to serve both producers and lenders. That's why today's hearing is so important. The discussion today will help guide the next steps in our Farm Bill reauthorization process and ensure that the credit title complements the changes we made in the One Big Beautiful Bill. It will also underscore the need to support our producers who take the risk to grow the food, fiber, and fuel our country depends on. I want to thank our witnesses for being here and for all of the work that you do every day. Your insight is critical to helping this committee get it right. With that, I'd like to welcome the distinguished ranking member, the gentlelady from Kansas, Ms. Davids, for any opening remarks she would like to give.
Thank you, Chairman Scott, for convening this important hearing. You know, Kansas is home to more than 55,000 farms, and agriculture remains the #1 economic driver in our state. And when I speak to Kansas producers, one issue consistently rises to the top, and that's the importance of the farm safety net. Since Congress last passed a full bipartisan farm bill in 2018, the landscape for producers has changed dramatically. Farmers and ranchers are facing high input costs, rising interest rates, supply chain disruptions, and market volatility driven by global uncertainty, including tariffs. These producers make programs like crop insurance and access to affordable credit, especially through USDA's credit programs, that much more critical. That's particularly true for beginning farmers and those in underserved communities who are trying to break into agriculture at a time when the average age of a Kansas producer is nearly 60 years old. Kansas producers have always been resilient, adapting to challenges that are immense, the Dust Bowl, droughts, climate change. But resilience is in the DNA of Kansans, but it does take partnership. And it's our job on this committee and in the Congress to be that partner, to ensure that the risk management tools that farmers rely on are strong, that they're accessible, and that they're responsive to the needs of the folks making use of them. And I want to thank you, our panel today, for being here, for sharing your insights and expertise. Your experiences are certainly critical to this committee, to our ability to ensure that federal agricultural policy works for all farmers, and that includes new ones, inexperienced, experienced farmers, large and small, and folks in every corner of our country. So I look forward to hearing your testimony, and I appreciate the time. Thank you, Chairman, and I yield back.
Thank you, Ranking Member Davids. The chair would request that other members submit their opening statements for the record so the witnesses may begin their testimony and ensure that there is ample time for questions. Please limit your statements to approximately 5 minutes. You got a marker in front of you, red, yellow, green. Green is good, yellow is getting close, and red means blue light's coming. Our first witness today, Mr. Clinton Hood from my home state of Georgia. With almost 4 decades of experience, Clinton has an extensive background in banking. He currently serves as Senior Vice President and the Director of the Ag and Timber Group at Synovus Banking Company. Our next witness is Ms. Mandy Minnick, the Senior Vice President of Stakeholder Relations at Ag West Farm Credit. Our third witness, and let me say this, one of my fellow subcommittee chairmen, Mr. Johnson, Dusty Johnson, is on the floor of the House of Representatives right now. Our next witness is Brian Gilbert of South Dakota from his home state. Mr. Gilbert is Senior Vice President and the Ag Banking Manager at First National Bank in Sioux Falls, South Dakota. And our final witness is Mr. John Russell Wicks, the owner and operator of Timber Ridge Organics in Ledger, Montana. Thank you all to all of our witnesses for joining us today. We'll now proceed to your testimony. As I said, you each have 5 minutes. I'm sure you understand the timer. Mr. Hood, please begin when you are ready.
Thank you, Chairman Scott, Ranking Member Davids, and members of the subcommittee. My name's Clint Hood, and yes, I'm a Senior Vice President with Synovus Bank down in Dublin, Georgia. I'm the head of our Ag and Timber Division, where we finance production agriculture, agribusiness, and forest industries. I worked in agricultural finance for over 37 years for banks of all sizes. Prior to banking, I farmed with my father in East Central Georgia on a very diverse row crop and livestock family farm. My wife and I now live on our farm in Dublin, and I've enjoyed instilling farm values in our children and our growing number of grandchildren. I'm a proud Georgia Bulldog, go Dogs, and I've always been felt lucky to be around agriculture my entire life. I believe my story is somewhat similar to other agricultural bankers. I have passion for agriculture that extends well beyond the bank. All my career, I've been involved with many agricultural organizations, including Georgia Farm Bureau, Georgia Agribusiness Council, Georgia FFA Foundation, and the Georgia Cattlemen's Association. My favorite organization of those is the FFA, and this is the reason. The FFA strives to teach kids values and disciplines of agriculture through its youth programs. As an agriculture banker, I believe it's vital that we're working closely with our agriculture producers and agricultural groups. I appreciate this opportunity to present the views of agricultural banking at this hearing. Banks continue to be one of the first places that farmers and ranchers look for when they're trying to find agricultural loans, and over 80% of the banks in the United States have agriculture in their portfolio. Bankers finance all types of agriculture in every part of the country. Agricultural lending is a noble, but it's a tough profession. We work with our customers to improve their businesses, their livelihoods, both in the long and the short term. The current state of the agricultural economy is not healthy right now. However, the Emergency Commodity Assistance Program payments, better known as ECAP, have been very helpful, not only to the farmers and ranchers, but to the ag bankers as well. And we thank Congress and the USDA for getting those payments out quickly. But ECAP payments are a short-term solution to a long-term problem. All the farmers in my area continue to struggle financially due to low commodity prices and high input cost. I recently had to have a discussion with a farmer who does not borrow any working capital. He and his brother needed to cash out a long-term CD, a CD that had been in their family for years, but they had to cash it out in order to pay their shortfall in their operating cost because their margins continue to be upside down. Farmers are trying to find solutions to keep their operations going as working capital lines dry up and without taking any unnecessary extra debt. Congress took the first steps to provide new economic relief to our farmers and ranchers by increasing reference prices for commodities and by increasing the cost share for crop insurance in the recent tax legislation. Our farmers and ranchers have badly needed those provisions to be modernized to reflect where agriculture is now, not where it was 12 to 15 years ago. I still believe we need a long-term farm bill to help our rural communities. To me, the farm bill is really a food bill, as it supports the financial stability of our nation's food producers, but it also guarantees the consumers access to that food. We need to get a farm bill done now, or we're going to see the demise of American farmers and ranchers, the agricultural lenders that support them, and the rural communities where they live. ABA has a list of priorities that bankers would like to see in the next farm bill that I've highlighted in my written testimony. This includes increasing FSA guaranteed and direct loan programs. Additionally, changes to eligibility for beginning farmers and ranchers is vital to bringing the next generation of farmers and ranchers. Lastly, Farmer Mac is a tremendous partner, and we support efforts to modernize Farmer Mac to meet the needs of rural America. Beyond the Farm Bill, bankers continue to work on additional solutions to help our customers during these tough times. I'd like to thank Congressman Randy Fenstra, Congressman Don Davis, and the additional co-sponsors of the Access to Credit for Our Rural Economy Act, better known as the ACRE Act, which recently passed into law. In rural communities across this country, and especially the 5-state footprint of my employer, Synovus Bank, farmers and ranchers will see real benefit from the ACRE Act, and lowering costs for farmers and ranchers is vital at this time. Bankers are proud of the work that we do to support our nation's farmers and ranchers. The agriculture community is a critical part of our economy, and America banks remain committed to serve it through good times and bad. Thank you, and I'll be happy to answer any questions.
Chairman Scott, Ranking Member Davids, and members of the committee, thank you for hosting this hearing today to discuss the importance of the Farm Bill on lending and credit. My name is Mandy Minnick. I hold the position of Senior Vice President, Stakeholder Relations with AgWest Farm Credit, located in Spokane, Washington.
Could you bring your mic a little closer, please?
Is that better? Okay. AgWest Farm Credit offers dependable credit, crop insurance, and business resources supporting farmers, ranchers, fishermen, foresters, and rural residents in Alaska, Arizona, Idaho, Montana, Oregon, Washington, and parts of California. This includes support for growers that produce traditional crops, as well as many crops categorized as specialty by the USDA. We are a member-owned, locally governed cooperative and a proud member of the Farm Credit System. Along with 58 other farm credit institutions, we share a critical mission to support rural communities and agriculture with reliable, consistent credit and financial services today and tomorrow. As a cooperative, farm credit profits are used in only two ways: either retained in the institution to build financial strength and support more lending to our customers, or returned to our customers via patronage dividends. Annually, our board approves the distribution of cash dividends to customers through our patronage program. Representing 54% of our total earnings in 2024, this equated to $414 million returned to eligible customers last year. While patronage benefits help to effectively reduce the total borrowing costs for our customers, today's producers in the western U.S. are facing down markets across most crops. It is troubling when specialty crops, which are mainly influenced by market demand at home and abroad, are incurring multiple years of loss. The struggle in today's ag economy are serious, and what makes this economic downturn unique is the widespread impact across most commodities. Price declines, higher input costs, shrinking margins, tariff volatility, ag labor, environmental and regulatory pressures, and farm bill uncertainty are impacting not only business viability, but also the mental health in rural communities. Farmers and ranchers are managing today's problems under the 2018 Farm Bill solutions, which served agriculture well then, but no longer adequately address current challenges. And the longer this takes, the more problems elevate. One thing that we can control in the current ag environment is advocating for the certainty that a strong farm bill will bring our customers. Important to Ag West producers is the passage of a strong farm bill to advance multiple important tools and programs. Federal crop insurance is a vital risk mitigation tool for our customers. Ag West is committed to serving all producers regardless of size, complexity, or commodities that they grow. Whole farm revenue protection and micro-farm policies are successful risk tools for traditional crops like apples in Washington, grapes in California, and non-traditional crops like wasabi and kiwi berries that they grow in Oregon. We are grateful to Congress for their ongoing investment and improvements in this program. Ag West supports the Producer and Agricultural Credit Enhancement, PACE Act, that would modernize FSA loan programs through increased loan limits that reflect current costs of production agriculture. Full details are included in my written testimony, in which I share how strong FSA guaranteed loan programs assist agricultural lenders in providing opportunities, particularly for young and beginning farmers. The Fishing Industry Credit Enhancement Act would allow farm credits to provide commercial fishing-related businesses access to farm credit loans, just like other farm businesses do. Reliable credit sources for fishing-related businesses, such as tender boats or diesel mechanics in the communities that count on fishing to survive, is a much-needed resource. In my written testimony, I have included additional items for the Farm Bill that would benefit agriculture and rural communities. Ag West Farm Credit appreciates the farm and farm-related tax legislation included in the recent budget reconciliation package. Passing a strong farm bill remains a top priority to provide safety, certainty, and much-needed support to our producer owners in these very uncertain and challenging times. Thank you for having us today, and I look forward to your questions.
Perfect. Mr. Gilbert, please begin when you're ready. Thank you, ma'am.
Chairman Scott, Ranking Member Davids, and Subcommittee members, thank you for the opportunity to discuss financing farms. I am Brian Gilbert, Senior VP and Ag Banking Manager at the First National Bank in Sioux Falls, representing Independent Community Bankers of America. I own and operate a family farm that raises cow-calf pairs, finishes approximately 750 head of cattle each year, and I also raise corn and soybeans. Our nation's more than 4,000 community banks make nearly 80% of all ag loans made by commercial banks, or $151 million. Community banks have deep roots in their communities. More than 1,000 banks are more than 100 years old and have survived the Great Depression, the Great Recession, and are still standing by their customers through good times and bad. Community banks are relationship lenders that fund local loans with local deposits. First National Bank in Sioux Falls started 140 years ago in 1885. We are a $2 billion bank, heavily involved in ag lending and risk management with a bank-owned crop insurance agency. Several of our bank's 12 ag lenders own family farms. We want to help producers buy that next parcel of ground, add to their herd, or figure out how to make their operations more efficient and productive. As a farmer myself, I can attest that agriculture can often be difficult and have great uncertainty due to extreme fluctuations in prices, weather, markets, diseases. Our bank works with farmers to prepare them for a wide variety of challenges. We look at whether producers can cash flow, and crop insurance is a very important tool. We have an insurance agency called First Ag Risk Management, or FARM. Due to the unpredictable weather, financial risks are always present. Drought, hail, floods, and other weather events put farmers and ranchers and their crops and livestock in danger. Crop insurance enables producers to repay bank loans and qualify for credit. Crop insurance fits into the bigger system of inputs, marketing, risk mitigation. Our farm agency solutions help producers build a customized risk management plan. USDA's livestock risk protection program is also quite important, and we have many producers that utilize that program. We offer education through our Farmers and Bankers program. Topics include farm financials, crop insurance, marketing, trust and estate planning, and taxes. Having strong marketing skills can generate profits. USDA guarantees allow banks to work with borrowers who cannot qualify for conventional credit or who are beginning farmers. A USDA express loan program requiring USDA to approve guaranteed loan applications within a couple days in exchange for a lower guarantee amount for loans up to $1 million is needed. SBA's express loan program works well. To have real impact, the USDA express concept should apply to standard and certified lenders. We appreciate the committee's higher USDA guaranteed farm loan limits, $3.5 million for ag real estate loans and $3 million for guaranteed operating loans are necessary given today's land values and production cost. I purchased my first farm ground, 240 acres, with USDA's down payment loan program. It's a great program for a beginning farmer. The Farm Credit System has major proposals that would fuel tens of billions of dollars or more in new non-farm financing for the FCS at the expense of tax-paying community banks. As a government-sponsored enterprise, FCS's effective tax rate in 2024 was only 2%, far below what community banks pay. The FCS is a central community facility proposal to finance schools, fire stations, health clinics, etc., without regulators' pre-approval, considerably broadens their scope. FCS should at most be a supplemental source of credit once the private sector lenders have committed to providing the majority of funds. FCS proposes expanding housing loans in towns of 10,000, a 300% increase. 75% of all towns are below or at 5,000 population. The Farm Credit Act should be tightened to limit FCS deposit-taking activities, which is draining community banks of deposits. In conclusion, we appreciate the committee's work and we thank Congress for the $10 billion in economic loss payments, $20 billion in disaster aid, and higher reference prices and continued crop insurance protections. We appreciate the inclusion of the Acre Act in H.R. 1, but encourage the 25% tax exemption to be raised to 100%. Thank you.
Thank you, Mr. Gilbert. Mr. Wicks, please begin.
Thank you, Chairman Scott and Ranking Member Davids, for your invitation to testify today. My name is John Wicks, and I'm a fourth-generation farmer in Montana. I'm a Farmers Union member, and I serve as president of the Liberty Tool Local Farmers Union. I grew up on a dry land farm and have been running our family farm since 2007. I was attending college when my father passed, and I returned to the farm where I primarily raised lentils, chickpeas, wheat, durum, rye, and barley. Farming is a way of life, an important part of my identity, but it's also a business which demands significant investment in land, equipment, and inputs to succeed. It also comes with inescapable risks. That's why I need access to affordable and reliable credit and risk management tools to build and sustain a successful farm business. I will focus much of my testimony today on how important USDA FSA loan programs have been for my farm. While FSA lending is a small percentage of the overall agricultural lending portfolio, it's been critical for me and many others. My first experience with FSA loan programs was when I was 14 years old. I received a $5,000 youth loan to purchase cattle, and I ran those cattle alongside my dad's herd for 4 years. The proceeds helped fund my college education. Many beginning farmers lack equity, credit history, and can have difficulty accessing capital. USDA loan programs are designed to provide a pathway for beginning farmers to access credit. And this made a big difference for my farm. When I was starting out, our farm's combine suffered a major breakdown during harvest. Our bank wasn't able to provide another line of credit, but through FSA, I quickly purchased a replacement combine, which saved our harvest and helped me build equity in an operation that's still paying dividends today. FSA loan programs came in handy once again when I started growing pulse crops like lentils and chickpeas, which are more delicate to handle than grain crops. To make handling pulses feasible, I needed to purchase hopper bottom bins, which I bought using FSA Farm Storage Facility Loan. FSA loans also helped us transition the farm to the next generation. An FSA farm ownership loan helped me to take over land and the generational debt that was tied to it through a relatively safe loan option. I asked the committee to make important updates and improvements to FSA loan programs this year, including adjusting loan limits to reflect current economic environment, making it more feasible for farmers to restructure debt when needed, and ensuring those programs meet the unique needs of all types of producers. My family is also a customer of Ag West Farm Credit. We remain grateful for the time that Ag West helped us through a period of major financial stress. They understood the value of what we were trying to accomplish on our farm and more accurately evaluated our risk compared to other lenders we consulted. While access to affordable and reliable credit and well-functioning risk management tools are important for family farmers, we must have fair and competitive markets and a robust farm safety net. Farm bankruptcies are on the rise. Recent changes to improve the farm safety net may help alleviate some challenges with persistently high input costs and low commodity prices, but farmers will face major economic stress as long as corporate monopolies in agriculture remain unchecked the way they are today. Thankfully, lawmakers can take action to address these challenges. For example, you can strengthen the connection between the USDA and our chief federal competition and antitrust law enforcers, the DOJ and the FTC, by passing the Meat and Poultry Special Investigator Act. We can ensure that recently finalized Packers and Stockyard Act rules are retained and forcefully implemented. You can reestablish country of origin labeling for beef so consumers know where their food is really coming from, and so farmers and ranchers are paid fairly. You can guarantee farmers the right to repair their own farm equipment. You can expand local and regional market opportunities for farmers, such as by investing in new local meat processing. And you can strengthen these markets with more financial and technical support, local and regional food procurement by food banks, schools, and other institutions. Thank you for the opportunity to testify today, and I look forward to answering your questions.
Thank you all for your testimony today. At this time, members will be recognized for questions in order of seniority, alternating between majority and minority members and in order of arrival for those who joined us after the hearing convened. Each member is recognized for 5 minutes in order to allow us to get as many questions as possible. I now recognize myself for 5 minutes. To those of you who are lenders here with us today, we all know that the process of approving a loan is not simple. What are some of the lending programs at the Farm Service Agency you're able to utilize to ensure that you're making a sound financial decision when reviewing a loan application? Additionally, what are some of the changes and improvements we can look at making as we continue our work to finish the Farm Bill? And I would specifically like to hear your opinion on the time that it takes to get the approval. Mr. Hood?
Ask me again.
I'm sorry?
Were you asking that to me?
I'm asking to all of you who are lenders.
Okay. Yeah, please.
Yeah, I can go first.
Okay.
At First National Bank, we've teamed up with FSA on many loans. I know in my oral testimony I said that we use FSA for customers that maybe don't qualify for conventional financing and beginning farmers. But I would tell you that has really expanded. Our partnership with them has really expanded in the last couple of years, where some of our more sophisticated, younger borrowers are utilizing joint financing, where they'll finance a portion, 45%, we'll finance 50, and they only have to put 10% down. It's a very great way for a young producer to be able to compete and enter the market. So those farm ownership joint loans, we utilize the guarantee program at First National Bank, but probably not as heavily as what a smaller, more rural bank would because of their lending limits versus ours. But we do use guaranteed loans. We're a preferred lender with FSA, so our loan approvals, they come fairly reasonable, but I know we've had some of our banks through ICBA that aren't preferred lenders, and they're saying timing is 30 or 60 or 90 days, which that doesn't really cut it in today's, just with how fast things are moving.
I would echo that as well. So Ag West is a preferred lender also when we're getting guarantees, so that is very helpful. But oftentimes, even though we go through a rigorous program ahead of time to look at those credits and make sure that they're packaged well, it can still take quite a long time for them to come back from FSA. So making that more streamlined, particularly for preferred lenders, as well as the increase to the loan limits that are out there for those when you send a loan to FSA to get a guarantee, or even in the direct lending, and it's close to the top of the lending limits, then that puts up some red flags and things that they have to look at a little bit longer. So both of those, making it just easier for our customers to get access more quickly, are very important.
Mr. Chairman, I don't have a lot to add to that. My bank handles a very mature ag portfolio, and we don't have the staff right now to do the new farmer, the young farmer programs like I would like to. As we grow our portfolio, I'm going to add some more staff. For me personally, I think it's an extremely valuable tool that farmers, bankers can use to help farmers, not just farmers that are farming with their parents or with their family, but also farmers that the bug just hit them, that they want to get out on the farm and take the leap. It's hard to do when you don't have the resources, and even when you compare it to what you go to the equipment place to buy this several $100,000 equipment, it's monumental, the task that it takes to be able to finance all that. So, but I love the first-time farmer programs. We just don't utilize them right now.
Mr. Hood, you've, I mean, you're a banker in my part of the world. I mean, you've got a front row seat to the economics of what's happening in rural America. You've outlined some of this, you know, and how, you know, our economy starts and stops with the farm economy, where we come from. Each season, certainly in the last several seasons especially, farmers have put more and more money at risk to continue to seek what, from I can tell, is a smaller and smaller profit margin. What does a long-term farm bill mean to that community that you serve, and how can we build on the work of the legislation that has recently passed to make sure that our rural communities and specifically our ag economy can expand?
Yes, sir, Mr. Chairman. That is a vital tool that not just the ag bankers have, but the farmers have, to be able to have a farm bill that they can count on. And, you know, historically, farmers have used the commodities market, wherever that market price falls, to be able to either break even or make a profit. Now, the commodity market is so depressed that all these margins are upside down. Well, the proverbial safety net that the Farm Bill has always provided has really way below where that margin needs to be. So the farmer finds themselves in no man's land. The commodity market can't help them survive, and the Farm Bill can't help them survive. So they're in between, and it's really hard on these families right now.
My time has expired, but I literally, as my neighbor was talking to me about, you know, his concerns with planting cotton, The question I asked him is, why would you plant it with the price that it's at? And I
right.
know you've got the payment on the cotton picker, and you got the payments on everything else, and sometimes you gotta have it in the rotation. But man, it's sure hard to plant when you
Yes,
know
it
you're
is.
gonna lose X numbers of dollars per acre, even if you do everything right.
$180 per acre loss with brackets around it on paper. So you know if it's not working on paper, it's not gonna work in real life either.
And that's for cotton.
Yes, sir, Cotton.
Ms. Davids?
Thank you, Chairman. It might seem as though I planned this based on your first question. We didn't coordinate that. We could have. And thank you for holding this hearing. So, you know, Kansas producers rely on, of course, on credit and crop insurance to navigate those ups and downs that we've been hearing about from you all already. And I think those tools are especially important for new and beginning farmers who face significant barriers when trying to get started. That's, you know, whether it's land access, equipment costs, just the securing of a loan. And, you know, in Kansas, less than 10% of our producers are under the age of 35, and that is concerning. I think not just to me, but to quite a few people, and it's something that we need to address if we're going to see a future of farming that's sustainable. Mr. Wicks, I was hoping to hear from you on the other side of the ledger there for this FSA. You know, in your written testimony and in your oral testimony, you talked about the value of the Farm Service Agency and specifically mentioned the Young Farmers Program. I'm curious if you could just share a bit about improvements that we could make to those programs to better support access to credit for beginning farmers and ranchers who are just getting started. And then if others want to chime in after for improved provisions that you think might help.
Yes, thank you. I think it's really important to, you know, increase those loan limits a little bit to help, you know, with the rising costs of everything, and to maybe expedite the process of the paperwork to kind of get people the financing quicker. But the tools are really amazing and really helpful for somebody that, you know, our farm, we were struggling with, we were reaching the end of our equity and needing a new operator to come in, and that was me. So just having that access to maybe more funding and, you know, for the farm ownership loan, that was quite a process to start. And, you know, it took months, and I mean, the buyer was my mother. So, you know, she knew she was gonna sell to me,
Hard
but
bargain.
in another case, yeah, in another case, you might have somebody else outbid you while you're going through all the loan approvals, so
Yeah,
I think
do
the
you
pre-approval would be great.
Oh, okay. Thank you. I was going to ask that specific thing. Okay.
Thank you.
I don't know if anybody else. Go ahead, Mr. Gilbert.
Yeah, I touched on it a little bit, but that express loan program, and if we, you know, to get quicker answers, and I think banks across the country, I won't speak for Farm Credit, but Mandy can, but I think we would be okay with reducing the level of the guarantee if we could get an answer quicker in some cases. So the banks or Farm Credit would take more of the burden, say if it was a 50-50 guarantee versus, or a 75-25 guarantee versus that 90% FSA guarantee. One thing we struggle with a little bit that I could mention is, and John kind of touched on it, but that farm ownership piece, when a piece of land goes to auction, and we want to finance it through FSA, it's very difficult because of the time constraints. Usually they want to close within 60 days. There's no, appraisals are taking longer, title work's taking longer. And the FSA, at least in our area, doesn't allow for the bank to fund it on a bridge loan, say, a 90-day note, and then refinance it with FSA. So we jump through a lot of hoops with that, but there is one thing there that if they would allow us to just finance it initially and then refinance it with FSA with the same borrower, it'd be very helpful.
I would agree with that and appreciate the journey we've had with Mr. Wicks on getting his farm up and running. I think that FSA Ag West Farm Credit partnership is invaluable, so having those partnerships. Especially on the preferred lenders, so those of us that have already gone through a lot of qualifications with FSA, if there's a few more things you have to ask us and we have to do ahead of time for us to be able to get those guarantees, that would be another option, as opposed to lessening the amount of the guarantees. So tell us what we need to do to qualify more, and then come back and look at those loans later on if you need to. And again, we've already talked about increasing those loan limits for beginning farmers is really important.
Thank you.
The only thing I would add to that is a great question. I've been in banking for 37 years, and they sucked the fun out of banking years ago.
Did you
And
say,
it
what, did you
takes-
say Congress?
No.
I'm just kidding. Sorry. Sorry.
Just the process.
Yeah.
It is very difficult being an ag lender today. It's difficult being a banker in general, especially agriculture. But what I would love to see, anything that can help reduce the time constraints on the process, and there's some really good ideas here, I'm in favor of. The reason I haven't put this in place in my bank, it takes a lot more staff to do it, because even a commercial loan now takes over 60 days to get through, and the farmer's sitting there waiting on money. The government guarantee is even longer. So anything that can reduce the time constraint.
Thank you. These are some great ideas, and I'll probably end up following up. Thank you, Chairman. I yield back.
Thank you. I heard you loud and clear on the bridge loan. We'll find out if that's legislative or regulatory, and follow up on that. With that, Mr. Crawford, you're recognized for 5 minutes.
Thank you, Mr. Chairman. I have a bill that I've been working on actually probably since I've been here in Congress. It's called the Farm Risk Abatement and Mitigation Election, or the FRAME Act. What this does is sets up a tax-deferred savings account for farmers. We call them FRAME accounts, where a farmer can deposit funds tax-free during profitable years and withdraw tax-free during hard times. So it's almost a little bit like an FSA, or HSA kind of model, but it's geared toward farmers and providing some degree of risk abatement for those, and it opens another option for farmers to invest tax-advantaged profits outside of the traditional Section 179, where we're going to run out and buy a new tractor or a combine to avoid, a tax liability, but now we've incurred more debt. And so when that's appropriate, I'm all for Section 179, buy the new combine, buy the new cotton picker or tractor as you need it, but not as a tax strategy. I think that creates more problems. So this serves a couple of different things. The other thing it does is the deposit account can be used to help collateralize an operating loan. I mean, there's a lot of advantages to it. So I want to get your feedback. I know we've got some lenders at the table, we've got farmers at the table here. I want to get your feedback, understanding that obviously in the current crisis, it's really difficult to try to tell farmers to put money in a FRAME account. That's the whole point. It's not always going to be like this. We're going to get back to a point at which, we'll have some more profitable years, hopefully. But you get my point here. I just kind of want to get your feedback. And Mr. Hood, I'll start with you because you've got a long history of ag lending and kind of want to get your perspective on that.
Yes, sir, Congressman, and that's a great question, and I love the premise of what you're trying to do. My first initial question would be, really to fund the account, you're pulling capital out of the farm enterprise and putting it into account. Same way I do with the bank with my health savings account. I get that. The question I would have, is it subject to seizure? Is it subject to being used in hard times? And does it become an off-balance sheet item to where the bank can't count that as capital? Because these farmers need all the capital they can get right now to qualify for loans. Sure. If it's an on-balance sheet savings account, then I say, heck yeah, we'll just put that aside. It's not that dissimilar than a CD, except you've had to pay taxes on the CD. So
right.
I like the idea.
Yeah, good. Yeah, I think your assessment is right. I do think that would be an on-balance account for those purposes as you described. So that's our goal there. Anybody else want to weigh in on that?
Conceptually, we think it's a great idea as well. And I think about, like you said, the number of farmers that have utilized Section 179 and some of them should have, but a lot of them probably got in, or some of them got in over their heads. So I think, farmers can always benefit from having tax-free accounts, and I think we could accomplish placing a hold on that account or some way to collateralize it. So yeah, we'd love to work with you on the details to
I have
get
to be
it
careful
across.
about that Section 179 piece because having worked in the equipment business for a long time, I don't want to alienate my equipment dealers. But we
Right.
also know too that it's important to, for that farmers make good choices with regard to how that's reflected on the balance sheet, and incurring more debt to avoid tax liability is not necessarily a good strategy long-term. Any other comments?
Yeah, I'd just say that that might be an option. I've never been a fan of spending money, putting on debt just to avoid a little tax. But I think as a farmer, I'd be more worried about the safety net first, and really encouraging that to be
You just led into my next question on this.
Okay.
It's been brought up to my attention from some of my constituents that crop insurance companies have been pulling out of areas they consider to be high risk, and that's certainly in my district that's been brought to my attention. Since crop insurance companies receive federal subsidies to offer services, that's a concern to me. So have any of you heard anything like that, and what are some of the, what's your perspective on that? I mean, I don't think we should be taking a geographic look at crop insurance eligibility, but let me get your thoughts on it.
I haven't had experience in that. So.
I would like to say thank you, first of all. Some of the relief for that, I think, came in the budget reconciliations around the A&O, and then some of the payouts that are going to go to the AIPs, but it's still a problem with the high risk levels that are happening, especially in specialty crops that are one-off. The markets are so volatile because there's such a short period of time to be able to market those crops. So there's still some work to be done to make sure that all of our producers have access to the crop insurance programs that are out there, and there's still some more programs that could be put in place as well.
Thank you. Mr. Chairman, I yield back.
Mr. Sorensen, you are recognized for 5 minutes.
Thank you, Mr. Chairman. Our farmers are betting big every season with borrowed money up against Mother Nature and economic uncertainty. The stakes get higher every year. In the United States, more farms have filed for bankruptcy in the first 3 months of this year than all of 2024. It's a clear sign that the extreme financial pressures of 2018 and 2019 are coming back. Input costs are rising significantly while commodity prices are dropping. Add to that uncertainty with trade and tariffs, with the cherry on top being any potential drought or flash flood, tornado, or straight line winds that flatten a crop. In fact, severe weather's in my district ongoing right now over the farm fields of northern Illinois. The one thing that we can do today is put America farms first. This administration needs to work harder so producers can be competitive. And it needs to create an environment that is predictable and stable. Even with the most fertile soils on earth, Illinois is challenged. Lenders remain a critical part of the equation, helping farmers finance the equipment and infrastructure needed to keep operations running. And during downturns, these programs don't replace profitability, but they do reduce income volatility, preserve credit access, and help producers stay afloat so they can get to the next growing season. Crop insurance and price supports are necessary safeguards that not only protect their operations, but are also often required to secure financing. Farmers in Illinois are some of the most productive and resilient in the country, in the world. But to keep that legacy going, to ensure these operations can be passed on to the next generation, we have to give them the tools to succeed. And that means strengthening the farm safety net, expanding access to credit, and crafting policies that are flexible enough to reflect the real conditions on the ground. And Mr. Hood, I want to begin with you. In your opening statement just a few moments ago, you talked about the value of the FFA. I'm so grateful that I had some young men and women in my office today wearing those corduroy jackets. How we need to make sure that that next generation is there for us in agriculture. It is so important. And so I hope that you can talk a little bit more about how we can make sure that we're doing everything when it comes to credit for new and beginning farmers. Could you touch on that?
Yes, sir, I can, Congressman, and I love that topic. Thank you for bringing that up. This is near and dear to my heart, not just because I serve on the Georgia FFA Foundation, where we try to raise money to make sure some of these underprivileged kids that want to experience the ag, that they can't do it in their own pocketbook, that we're able to help them do it. So I love that program. You mentioned the difficulties in various times during the cycle of agriculture. It made me go back to the mid-'80s. When you take 2025 and you subtract my 37 years of banking, you arrive in the mid-'80s. That's when I had to leave the farm. And I have a hard time sometimes talking about it because it's very emotional for me. My family continues to farm today. My brothers have taken over. But I was the oldest son, and I had to leave. One day, my daddy stopped at the mailbox. I don't know what was in the mailbox. It was probably something from a bank. But he looked at me in the truck and said, "Clint, you probably need to go do something else for a living because the farm is holding you back." Well, that was the catalyst for me to leave. Thank goodness God was shining on me, and I went into the ag finance business. But I don't want that happening to people. I've been very fortunate that I could come back and be part of agriculture, but a lot of people can't when this goes. And we're at a crux of time where this is about to happen to these farmers. The 80s is about to happen again. The only difference in the 80s and today, in the 80s, farmers were flat broke. They were insolvent. Their liabilities were higher than their assets. Today, their assets are still higher than their liabilities, but it's because of the equities that they have in the farmland. Well, as you know, equity is given to you in two different places. Number one, the market can give you equities, running up values depending on where your farm is. The other way to get equity is to pay debt down. So our equities are eroding right now.
So, and I may open this up to all of you. What is the canary in the coal mine? We talk about the 1980s, and I live in Moline, Illinois, and International Harvester is just a slab, right? John Deere is holding on only because of the diversification and also the international nature of their business. What is the canary in the coal mine when it comes to farm credit and making sure that we're there for our producers?
The gentleman's time's expired. If one of you can answer that real quick.
I think one of the biggest differences is the crop insurance safety net here versus the 80s. So that's just extremely important to all lenders and all farmers. That's the biggest thing I would say, my takeaway.
Thank you, Mr. Chairman, for giving me some extra time, and I yield back.
Mr. Boss, you're now recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank you all for being here. And as we were just describing, farming is a risky business, and it requires specific time, energy, and investment. And getting into this industry can be a challenge with the rising cost of land, input prices, and equipment. Many farmers hit the FSA guaranteed loan limit quickly, very quickly. Mr. Hood, can you comment on the importance of increasing FSA loan limits and how it could be mutually beneficial to both farmers and the banks? And additionally, what other provisions should we look at to support in the credit title of the Farm Bill to help new and beginning farmers gain access?
Yes, sir, Congressman, thank you for that. I don't see how we can't increase limits. Our cost to put a crop in is unbelievable now. And when you've got depressed commodity prices, that gives you a recipe for failure. And I do believe that it is time to increase a lot. In my bank in the last 2 years, I've told my bankers whether the farmer is asking for an increase in their line of credit for the coming year or not, increase it by 20%. It is so much easier to do it on the front end in March and April than it is August and September when you've got to really worry, are they going to be able to pay me back, and then have to go give them a little bit extra money. You can tell as a banker, you can tell as a farmer, you can tell as a Congress member, there's not enough money out there to operate on without increases. So I love that idea.
So, Mr. Gilbert, in your role as a local lender, you're not just providing credit. You're often a trusted advisor for producers making complex business decisions. Can you speak on how you and your institution support producers beyond the loan itself? Specifically, maybe how you talk to the producer, give them risk management discussions, and tools like crop insurance or Title I program. In fact, the factor advice, giving them to help them understand what is available to them. I know most farmers, if they've been around a long time, they're going to know, but most of our young farmers that we're wanting to keep in don't always know.
That's right. No, great question. At the First National Bank in Sioux Falls, education and adding value is a huge piece of what we do because we don't want to just vend money. And a big part of that is being a trusted advisor. I spoke to our Farmers and Bankers program. That's an intense 4 to 5 session program where we do teach them or help coach them through their farm financials. We talk about insurance, the importance of marketing, and also the programs that are out there that we can team up with FSA and Farmer Mac and other folks to to help them achieve their goals. Our lenders are, the vast majority of them are licensed to sell crop insurance as well as livestock risk protection, not because we take a different approach than what other banks and institutions do. We're not trying to increase our bottom line. What we're trying to do is make our lenders and agents more knowledgeable to help our farmers through that, or through the ups and downs, and work with them to, especially on the LRP side of things is been huge. I can speak from my own personal experience. Margin calls, if you're hedged, are tough. It's easier as a banker to say you made the right choice when it's your own dollars. It's tough. So that LRP program, that the producers don't have to pay the premium until the end of the period, till the cattle are sold, has been really beneficial. And quite frankly, I think will stop a huge, I don't want to say this, but a huge decline in profitability. The cattle market is so high right now, and without a risk protection, price protection, there could be a severe losses of money. I mean, so that program has been awesome for that, in my opinion.
Thank you, and I want to thank you all for being here, and with that, I'm going to yield back.
Thank you. Ms. Brown.
Thank
You're
you.
now recognized for 5 minutes.
Thank you, Chairman Scott and Ranking Member Davids. So it seems like the only predictable thing about farming is that it is unpredictable. Whether it's rising input costs, extreme weather, or shifting tariff policies, producers today face uncertainty at every turn. But access to capital and risk management tools shouldn't be a part of that uncertainty. Farmers and ranchers and dairymen and women need confidence to plan and plant and invest in equipment and recover from a natural disaster. That comes not only from investing meaningfully in key Farm Bill programs, but also making sure that those dollars are backed up by thoughtful and forward-looking policy. Well-funded is only half the battle. Well-designed is the other half. Unfortunately, the partisan bill passed 2 weeks ago missed the mark. It fractured the historic Farm Bill coalition and plussed up programs without doing the hard work of improving and modernizing them. That is exactly why we have a Farm Bill process, to be deliberative and responsive. So, Ms. Minnick, your testimony talks about some of the unique challenges that specialty crop farmers face when accessing traditional risk management tools. Ohio ranks 4th in the nation for the diversity of specialty crops grown. So I've heard firsthand about how one size doesn't fit all when it comes to risk management tools. Can you talk about what policy or structural changes would help make those tools more accessible and relevant for specialty crop growers?
Yes, thank you for that question. So California, I believe, is the top state for the specialty crops grown, and so throughout the West Coast, we've got many of those in our service territory. And the Whole Farm Revenue Protection Program and the Micro Farm have been really instrumental in moving things forward, because folks with specialty crops that weren't qualified for crop insurance in the past can use those. Those tools have been important, but they're very complex and hard to understand as the agent and as the producer. We've had a couple experiences in the last year or two where other crop insurance agencies have come to us saying, we've got people that work here that are retiring or things like that. Will you take our whole farm revenue portfolio? There's no buying, there's no anything like that because it's so complex, they don't feel like it's worth the investment to learn how to administer those policies. And so if you don't have agents that are willing to learn and know how to work with those customers, then having them out there, if producers can't access them, then it doesn't support that. So really making sure that we can streamline those processes, that they can cover more commodities, and also that agents remain compensated to be able to do that, to keep the lights on is a very important part of that. And then also continuing to broaden the different specialty crops that are included in some of the different programs. For example, we've been working on an oyster policy for many years that we would like to see come to fruition. Sometimes specialty crops will have policy rolled out in specific geographic areas, but then they're not expanded to other counties where there's a lot of that production or other states. So there are some areas where we could really see some improvements just to have more access for more producers.
Thank you. Mr. Hood, your testimony talks about the importance of supporting young and beginning farmers and ranchers on their journey to enter the industry. Despite increased funding for beginning farmer programs, the average age of farmers in this country is 58 years old and rising. That's a clear sign that our tools need to be improved. Mr. Hood, you know the challenges that beginning farmers face when they enter the industry. Costs are high, programs just don't fit the realities of starting a new operation. What policy changes beyond just increasing funding are most critical to making federal credit and risk management tools truly accessible and workable for beginning farmers?
Thank you, Congresswoman. That is a very difficult question, and I ask myself that all the time because I'm the father of 6 children, and the first 5 have not come back to the farm. And I'm the oldest of 5 in my family, and 3 of us did not come back home to the farm. We couldn't afford to. I got a holdout on my 13-year-old. Hopefully he's got enough interest in it to where he'll come back. But the biggest issue that I've seen is just the monumental expense. And it's not just finding the operating money, getting the FSA guaranteed loan. It's how do you go to John Deere or some of these other equipment places and negotiate hundreds of thousands of dollars of equipment needs. You really have to have a family member that already has that equipment and that they like you and that they will let you use that equipment. Trying to start from scratch in this country today is a daunting task, and I don't have a clear answer for that. I know it needs to be paid attention to, and you guys have the power to do that, and I would welcome any other ideas, but something needs to be done to help preserve this for young people.
My time has expired. Thank you, Mr. Chairman.
Thank you, Ms. Brown. I can tell you my personal scenario, and you know this, Mr. Hood or Clint back home. I have a brother, a sister, and 5 first cousins, and all of our grandparents farmed, and none of us farm.
Yes, sir.
And that's what scares me for the future
Yes, sir.
of agriculture. Mr. Taylor from Ohio, you are recognized for 5 minutes.
Thank you, Chairman and Ranking Member, for holding this hearing today, and great thanks to our witnesses for sharing your expertise on credit in our agricultural industry and the sacrifices you all made to be here with us today. I want to go a little further on with the line of questioning my colleague, Representative Brown, was just talking about. Over the next 2 decades, almost 50% of our farmland is expected to transfer hands. Currently, only 9% of farmers are under the age of 35, while nearly 40% are over the age of 65. As we think about our farmland, in my opinion, it should remain in farmland and not in solar panels, not be sold to adversaries like China and others, and be owned and operated by a local farmer. I mean, that's what my preference would be. I think that would be the most positive road forward. This not only helps the next generations, but it helps all of our rural communities thrive. As a guest in my office earlier put it succinctly, succession is success. So, Mr. Hood, you were asked about it. I want to open it up to the panel. What USDA programs do you folks think have been helpful or productive for beginning farmers who are looking to acquire land and get into the business or take over their family business.
I would just say that farm ownership loan for beginning farmers has been very helpful, along with the, having access to an operating line. Those tools, that's quite a bit of money, we're talking about for a young person starting out, maybe leasing part of a farm and buying another. So those programs there for farm ownership and equipment purchases are really, really helpful for young people to get into agriculture and remain there for the succession.
Sure.
I know we talked about the average age or the demographic of farmers being about 58 and a half. We have the luxury at First National Bank of having a younger than that portfolio. Our average age of our entire portfolio of the farmer is 51 and a half. And there's two things, I think, that have helped our customer base either enter the market or be younger than the average, and not that we're trying to age discriminate, but we all know that we have to get the next generation involved. And those two things are livestock and agribusiness. We have worked tirelessly with the USDA to get equip funds, things like that, to help our borrowers, mostly young, build a deep pit cattle barn or a hog confinement facility to add revenue to their farms. And we've also really pushed in our area. We're fortunate because we do have very fertile ground in most of our trade territory, but we've really pushed the focus on agribusiness too. A lot of these young farmers have to have something besides just the farm to help. So if there's something we could tie in with that, I think it would be very helpful. And I don't know what that is, but we can get back to you on that.
Okay, thank you. Ms. Minnick, did you have anything you want to add?
I would just agree with what they have all said, and I would also say that those programs where it's not always, especially for a beginning farmer or somebody that's maybe been farming for a while, but they're experiencing some economic downturns, to be able to jump straight from FSA to a full-fledged borrower. And so to have some of those down payment assistance, some of those different stepping stones is really important. And then I think working closely, having great folks in your FSA offices, they really understand those customers and want to see them graduate. So I think that staff at the FSA office is really important as well.
Okay, thank you. I do want to, since this is being recorded, I do want to give my position on 58 not actually being old, just so we all agree with it. We talked about what programs are helping some, and I don't have a whole lot of time left, but is there something anybody on the panel has in their pocket that they say, I wish Congress would act on this specific thing? This would make such a big difference for young farmers, for succession of family farms.
To your point, since this is being recorded and we said it a lot, is increasing those FSA loan limits would make a huge difference.
Okay, thank you. Anybody else?
I'd second that.
Okay, great. Thank you, guys. Oh, go ahead, Mr. Hood.
The only thing I'll add to that is I love any program that'll help a farmer get started, get on their feet, but we still have to adhere to the banker's creed of the 5 C's of credit: the character, the capital, the capacity, the conditions, and the collateral. Specifically the character, which most of that's in place, but that capacity to repay right now is diminished. It is knocked in the head. So if you can't adhere to those 5 C's of credit, I'm not sure what program could help. So we need help in having the capacity to repay the debts.
Thank you all very much. I yield, Chairman.
Chair now recognizes Mr. Harris for 5 minutes.
Thank you, Mr. Chairman, and thanks to all of you for your time and your expertise that you brought. I greatly enjoyed reading through your testimonies that were submitted prior and reading through them. And I just had a couple of questions, and I think all of us have a lot of the same things on our minds today in this committee. But I did want to ask, Mr. Hood, in your testimony, you specifically mentioned that raising the limits on guaranteed loans and the down payment assistance program as changes that would greatly help the industry. You also mentioned the need for the Farm Service Agency to have access to new technology. Can you just elaborate more on the need and the value of the new technology you had in mind?
everybody benefits from new technology, Congressman, and I love that you brought this up. Our bank is constantly spending dollars on new technology to make us better bankers, but especially in the FSA program. My next door neighbor, who was also a cattle and pecan farmer, she is a retired FSA loan officer, and she and we get together for drinks and we talk about this all the time. If they had had today's technology back in the 70s and 80s, she said we could have gotten a lot more done for more farmers. So the technology piece, you're spot on. I don't know what all it includes. I still have to have a 7-year-old to show me how to operate a new phone when I get one. But the need is definitely out there to bring the technology level up.
Okay, great, thank you. And Mr. Gilbert, you have a great perspective as both a lender and a producer. And I imagine most farmers don't go into the business because they have a love of finance. But however, it's clear that today's farmers have to be savvy on debt and lending, while also experts on crops and livestock in the process. So can you share more about the Farmers and Bankers program that you mentioned in your testimony, and how education on finance is a key part of the farming operations?
Can we push the non-record button here? No, I'm just kidding. The Farmers and Bankers program actually was started by our current Chief Credit Officer, and he was a lender at the time, and it was about, I'm going to get this wrong, but probably 2016, and we were facing some challenges in our area, and we had noticed that a lot of our customers were just kind of, they were just kind of going through the motions, and they didn't necessarily understand, a lot of what it takes to be profitable or to improve margins, even to get closer to zero, maybe sometimes. So he had developed it's a 4 or 5 session program, and we bring in industry leaders from our Ag Advisory Board that we have at the bank, to FSA loan officers, to we bring in tax specialists. We do also have a wealth management department, so we bring them in too for some estate planning to help with that transition, and as well as I can't remember if I said it, but commodity brokers to just coach on break evens, and it's just another set of eyes other than their bankers saying, hey, you need to, this is what you need to do. But probably the most instrumental thing that we do there is we take them through case studies, and we show them, obviously we change the names, change the numbers, but show them the decisions that we had to make for farmers that were their age, and let them make the decision on whether they would have approved that loan or not. And I would say in the last 9 years that we've done that, I would say almost every group has said no, and we said yes in both of those case studies, and they're both still customers of ours. So it just helps the producer realize that, hey, there's more than just getting up every day, going out and doing chores, and planting the crop and harvesting the crop. It's a lot. It's not their dad's farm anymore. So.
Super. Well, thank you. Thank you so much for sharing that. Mr. Chairman, I yield back.
Thank you, Mr. Harris. Before we adjourn today, I would like to invite Ranking Member Davids to share any closing comments she may have.
Thank you, Chairman. Well, I want to first of all start by thanking all of our witnesses today. Thanks for sharing your time and your expertise and personal experiences. This is a crucial part of the work we do here. The subcommittee definitely needs to understand how producers and farmers are using credit and risk management tools that are available, and then, of course, where improvements can be made. And the testimony we heard today is absolutely going to help with that. I'm certainly committed to strengthening the farm safety net, especially for producers and our rural communities who keep our country and, frankly, the world fed. So thank you again, and Chairman, I yield back.
Thank you, Ranking Member. And I have already checked on some of the things I understand are legislative, and we will draft legislation, hopefully work together to try to get some simple changes done that help move this in the right direction. I appreciate you all for being here, and while lending is a big part of any successful operation, ultimately you have to have more dollars coming in than you have going out. The safety net's important for those bad years, but but long-term, you know, we got to have a system that works for our farmers to have more dollars coming in than they've got going out. That said, under the rules of the committee, the record of today's hearing will remain open for 10 calendar days to receive additional materials and supplementary written responses from the witnesses to any questions posed by members. Thank you, and this hearing of the Subcommittee on General Farm Commodities and Risk Management and Credit is adjourned.